Hello, hello. Welcome back to the Dinero Twins podcast, where we talk about all things business and money. Today, we have episode 12, where we have an amazing guest speaker. We're going to be talking about tax strategies for business owners. And here we have it. Hey, Twin.
Hi, Twin. Hello,
How's it
hello. Welcome,
going?
everyone. All right. So, yeah, we have an amazing guest, like Lisa just said. So, I'm going to read a little bit about Ariel's bio. So, Ariel Morel is an experienced small business consultant that specializes in tax strategy, commercial lending, and financial structuring with more than 10 years of experience helping small businesses succeed. In addition to his primary job functions, Ariel Morel has been on NBC10 and Telemundo for his extraordinary commitment to helping entrepreneurs and small businesses thrive. What's up, Ariel, Tax Daddy?
How's
Hey,
it
what's going on,
going?
ladies? How are you? Thank you
Good,
for
good.
having
How
me.
are you?
Good.
All good in the Sunshine State.
It's a little cold today, but the sun's still out, so that's good.
Yeah, you definitely have a better weather than we do, but it's okay. We're just happy to have you. So this, we started this podcast over 3 months or so ago. So we wanted to include a lot of our Latino experts that speak about different topics. I know you are so well-rounded because you do tax strategy, you do business planning, you do Turo, you do a lot. So
Yeah.
we wanted to bring you on because we know you are the man for this. So we want to jump right into it, right? So when we talk about small business owners, tell us a little bit about when should a business owner start tax planning?
As soon as they realize they're gonna start a business.
Okay.
So, for example, this is the thing about tax plan. Like just when you start your business, there's a lot of things that you left on the table. Like for everybody thinks that you can use deduct all your startup costs versus the IRS actually limits how much you can deduct. Like at the beginning, it could be like 5,000 or 50,000 before you start, right? There's a lot of guidelines. So, a lot of people tend to miss that, and then they go to their accountant, and then they're not able to deduct those startup costs. So when you're an entrepreneur, like once you start realizing that almost everything becomes tax deductible as long as it's ordinary and necessary for your business, when you realize that, then you're running a tax type ship from the beginning. You don't have to worry about paying taxes, legally, like as long as everything makes business sense. Because on average, entrepreneurs, they overpay like around 60 to 70% on taxes. Small business owners, just because of lack of knowledge. From simple deductions that are available to them just for being an entrepreneur, because the system right now, that's what they incentivize: ownership, entrepreneurship. Ownership to real estate. When you invest in real estate, you're creating housing. When you're an entrepreneur, you're creating jobs for other people. So you're helping the economy. So the government incentivizes you by giving you all these different tax write-offs and credits.
Interesting. And I'm so glad that you mentioned that, because I didn't expect that response as soon as you plan to start a business, because I feel like a lot of people wait. Oh, let me just wait until tax season comes around to get everything in order. But the fact that you mentioned that as soon as possible, as soon as you have a business idea, you need to understand what are the startup cost limitations. That's something that first time that I hear that, especially because a lot of people don't talk about that. So I'm glad that you mentioned that. I do want to also ask you a question, because I know that every business is taxed differently according to the corporation that you form, right? So which corporation would you consider to be, the best form for a small business?
So that question probably better depends on the specific situation of every business owner. But the best thing I could probably answer that question with, I'll tell you what's most popular and what works for more businesses. So the best structure right now, and by the way, this is not financial advice, it's just my opinion based on my experience, is for you to set up an LLC. And that LLC, you're gonna once you set up an LLC, the government views the LLC as a disregarded entity, and that's exactly what it means. It's just an entity that's disregarded by the government because they don't know if the business is actually serious, if it's gonna last. Once you start making money, I would say like at least on average like $40,000 of net profit, then you wanna choose the way that the business is taxed, because the LLC gives you flexibility of taxation. So you could be taxed as an Escort, on which like the profits and the losses, there is like a pass-through entity that passes over to the owner. You could be taxed as a C Corp, on which a business gets taxed first, and then on whatever's left, the owners pay taxes on that. Or you could be taxed as a general partnership, which is just like a sole proprietorship, just with somebody that's your partner. But LLC as an Escort, once you make at least $40,000 a year, then that's when it starts making sense. Like the savings will make sense, because what happens is the following. Once you set yourself up that way, you don't pay 15.3% on self-employment tax. At the beginning, where you're a disregarded entity, whatever profits you make, you're going to pay 15.3%. So when you become an escort, you only pay the 15.3% on what is called a necessary salary. Like you need to put yourself on a payroll position that's ordinary for the position that you're in versus the amount of money that you're bringing. And I say $40,000 because $40,000 in almost every single state is when the savings are going to outweigh the cost of establishing that LLC and paying for the taxes to be set up. Like now you should be saving at least like $2,000 to $3,000. But usually 40 grand is the startup amount. That's on profit, not gross revenue.
Okay, so
Wow.
net. Right.
Net, right?
I'm
Yes.
taking notes. This is
Me
I hope
too.
that everybody that's listening to this is also taking notes, because this is a very important conversation for self-employees, entrepreneurs, business owners, right? I also have a sub question to that. Now, I know that a lot of people, I know different tax strategies, different tax specialists say different things. I hear a lot that people say, okay, you should start off as an escort, but I hear something that you talk that is different. Which is you can be an LLC, but you're filing as an escort, right? You're filing as a C Corp, which is actually really great. So that's something that you can do, even though you are an LLC on paper.
Exactly. So there's a lot of confusion when it comes to that, because if you just open your company as a corporation, you have to choose how you're going to be taxed right away. You're either going to be an S Corp or a C Corp. Versus an LLC, it gives you the flexibility of taxation that you can always change from disregarded and then whatever makes sense for your business. And usually 9 times out of 10 in almost every single situation, unless you're planning to do a startup, you're going to be getting rounds of funding. The S Corp is the most popular and the most beneficial for your brick and mortar businesses or even online businesses. It's just like the more straight to the point. So nice. The LLC, you have an LLC that's being taxed as an S Corp. So you still have an LLC that's taxed as an S Corp, but you don't. But you say that you just have an S Corp, then you actually have a corporation that's being taxed as an S Corp. So hopefully that's like how you say it in English.
So the LLC is flexible.
It's exactly flexibility of taxation. That's one of the main things for the LLC. So you get to pick whatever is more convenient to you based on your tax situation, which is individual to every person.
Wow, this is awesome.
Yeah, and then adding to that, so I know that I've had this experience where if you open an LLC without a tax designation, just as an LLC plain, you're able to change it later to an S Corp or a C Corp, depending on what your needs are, right? What your income is looking like, if you hire employees, if you're growing. So that is also, it's flexible, right? It's not like you're stuck with that first designation that you pick at the beginning.
Exactly, 100% you're right. So you just think about the LLC as like the introductory version of a business for an entrepreneur. So the IRS understands that. So that's why they give you, like all the flexibility, because you're starting, and you ladies as entrepreneurs, you know that when you start, there's so many things that you don't know. Yeah. and then though not knowing is going to cost you a lot of money down the road. And then it might take you 3 to 4 years to realize that, oh my God, I could have saved 15% of what I'm paying on taxes just by choosing the right business structure. So because of that, the government they just put us a disregard entity. They don't know you're serious. Okay. They don't know what's going on. And honestly, they don't really care much about your LLC until you start getting serious and you pick the way you're going to be taxed.
Wow. Right. Makes total sense. And you start making revenue. That's when they want their cut. Yeah,
exactly. They want their money. But even, they give you 3 out of the first 5 years. There's something called the hobby rule where, you're just taking losses for the first 3 years out of the first 5. Is it really a hobby or is it a business? Okay. And if it's a business, you have to either justify why you're taking an L every year, you presenting on a loss, or actually identify, this is just a hobby. So you're not going to be able to take advantage of these deductions. So at one point you have to start making money, because there's some people that you started taking advantage of that so they could take all the deductions and then never really present a profit.
Yeah, exactly. Totally. Yeah, that makes sense. But it's good that they make it flexible. At least they understand that part of it. Okay. All right. Okay. I'm getting this. I'm getting the hang of it. All right. So tell me about your opinion on record keeping, because I know this is a time that we're all scrambling to collect our information for the 2021, right? As business owners to start filing taxes. So are there any apps or software that you recommend a small business to start using to make sure that they keep track of all of their expenses? Something easy to use?
They can use QuickBooks. QuickBooks
Okay.
actually, you can literally connect your bank account, and you can start categorizing all the expenses for your business. And let me expand a little bit on this topic because this topic is really important.
Yeah.
If you're watching this and you're an entrepreneur, you should not be afraid of taxes or being audited by the government. Or you should not be afraid, like, oh my God, I'm gonna overpay on taxes, I'm gonna do this. Like, you just have to like figure out a way to educate yourself, just like, read a little bit online, because all it takes to survive an audit is record keeping. Because once that auditor comes in, the first thing they want to see, let me see the books. And then those books better be detailed with notes. Like, because you could be audited like up to 7 years from the time that you file a tax return. So if you have like really good books and the auditor comes in, like, oh my God, they know what they're doing. Like, they're categorizing stuff. So which is good. That's what they want to see. They want to see that you actually have legitimate expenses. And all you gotta do is literally just take notes of what happened, like keep records, keep receipts, upload those receipts to QuickBooks. You can literally do it while you're having dinner with your twin partner here. You ladies are having lunch. That's 100% tax deductible right now.
In the Bronx.
Brunch, yeah, and then just write it. Hey, I had dinner with my business, brunch with my business partner. We discussed business. You can literally write on the receipt, take a picture, upload
that's what
it.
I do.
Tax deductible.
That's awesome.
That's
I'm still old school. I need to start using the apps for sure.
So yeah, exactly. Record keeping, especially when you're starting, should be embedded into like your daily routines or at least weekly. When you're doing it yourself, because when you start, you're wearing all the hats. And then later, hire a bookkeeper. You can literally hire a bookkeeper on QuickBooks too. And the price is fairly cheap. It could be like $100, $200, and they do everything for you, and they're already trained on QuickBooks. Because that's, you want to make sure whoever you hire, they actually know QuickBooks. I mean, there's other things they could use, but that's just the most popular one. It's super simple.
Good to know. Yes. All right. I'm going to jump on that ASAP.
That's a really good gem. So on top of record keeping, there's also something that I also want to discuss, which are mistakes, right? I know businesses make mistakes because when you're starting off, when you're starting any business, like you said, you wear multiple hats, you learn as you go most of the time. So what are the most common tax mistakes that businesses or just entrepreneurs make in the beginning?
I would say the first one is just not taking the time to understand how taxes work, because like that's one of the biggest benefits besides being your own boss, is now you're playing into the system that you're being incentivized just for having a business. So that's the first one, because like you're bleeding money from the beginning. Like I always tell people, when you start your business, like set everything up correctly, start that LLC, set up your business bank account, get that business cell phone. Now you start shifting your personal expenses towards the business if they're actually, you utilize them for business, because you don't want to come and go the two. And now what happens is the following. Now, like in most cases, like those dollars that you're expending, they're gonna beat inflation, because let's say, depending on whatever tax bracket you're in, let's say you're in the highest tax bracket, which is I think 37.5% right now. I haven't checked recently. Now that dollar you're spending for the business, it's actually $1.37. Compared to when you're spending after that dollar finally gets to you, if you're paying for business expenses, you subtract the 37 cents. So realistically, like your dollar has less purchasing power. So that's a big mistake that people do. Like literally, who wouldn't want a 37% raise? If you're not on the tax bracket, mind you, like at the beginning, you might be like on the 20s, but it's still like 20%. That's really good. The banks don't give you 20%, so you shouldn't be leaving money on the table. That's in my opinion, one of the biggest mistakes that people do.
Wow. Awesome. Well, thank you for adding that, because that's definitely something that a lot of people don't take the time to understand. And I think a lot of it is not that businesses or like business owners or entrepreneurs don't want to, is that they have so many other things to focus on that they feel like, oh, I'm just going to leave taxes for when tax season comes, right? They never actually, it's the whole year that you have to plan for tax season. It's not really just one time of the year. So thank you for adding that.
Yeah, for sure. And the other thing is, they also, a lot of people, including me, would be like, I'll let my tax guy handle it, right? So it's like, you don't really start understanding all the parts that move throughout the year. Like there are things that I even left out of filing because I just didn't know. And sometimes you go to the wrong tax person and they're just rushing, right? They're just trying to get you out of there. They got 30 other clients waiting. So I always tell people, now that I've gone through those mistakes, I tell people, take your time picking the right CPA or the right tax the right tax preparer that's going to sit with you, explain things, ask questions, go in there prepared, because if not, like you said, you leave money on the table.
You know who's the most important tax professional that you need to hire?
Who?
Is yourself. As an
Uh-huh.
entrepreneur, like you need to know exactly, what applies to your business, because this is what happens with accountants and, people that do what I do. The accountants are, they're on the compliance side. Their job is to make sure that like what you're giving them is in compliance with the government, with whatever guidance they have, so you don't get in trouble, and that you're taking the legitimate write-ups that you qualify for as an entrepreneur that you have. But then at the same time, when you're having brunch with your twin, you don't tell your accountant that was a business lunch, like there's no way they can know. So,
Yeah.
but once you have the knowledge, you can guide a tax conversation with whoever. You know what I mean? Like, so, because like their job, I mean, most smaller tax firms, they don't offer tax strategy. They just worry about, could be they worry about mass market right now. They're gonna make $200,000, $300,000 in the next 4 months. So like they just want volume. And then you have those boutique tax firms that 9 times out of 10, they're already booked out with clients, because as you know, it's hard to find a good tax professional. Yeah. And once you find that, the firm like hires you sometimes, like they interview you. Okay, you know what? You make sense. Like even me, like I don't just take any client. Like when I want to take a client, I interview them. I want to make sure that either if they have a mess with the books and stuff, I can come in and fix it, but they're willing to do things the right way. Like they ask me right away, okay, so I'm about to, get $300,000. Well, how can we make that disappear? Sorry, brother, go somewhere else.
We don't do that. We don't do that here.
Exactly.
That's
so, my accountant, my other friend accountant does it. Go to him. Go to him, and then so you can go yell with him, because that's something that we're not gonna do here. But the education and ownership has to start with you as a business owner. So then you tell your accountant, whoever it is, even tax preparer, these are the things that I took. These are the actual writers that I have. Like now, I need you to help me like implement them with my tax return. So it doesn't fall really on the accountant unless you hire a tax strategist. That's
very good advice. It takes a little bit of shifting to understand that, but it makes total sense, because again, it's like you got to put the ownership on you. Who's the one that has the interest, right? To like do it right.
And you truly have all the knowledge as to what's going on with your business. Your accountant doesn't. He has like 200 other clients, and he only knows what you tell him. So it's not your accountant's fault. So for all your accountants out there watching this, I'm on your side.
He's a little biased.
Not really. It's just because you have all these entrepreneurs. They always blame the accountant, but they only know what they know. And that's true.
That's the way accountants.
It does.
It starts with you guys.
So all tax accountants send Ariel a bottle. Ariel, what do you like to drink?
What label?
His address will be at the bottom in the description.
Oh, no.
I'm joking. All right. So now that we talked about, business expenses, things to claim, name 2 common tax write-offs that can easily get you audited.
I mean, it all depends, right? Like I would say the main one is people underreporting their income, because I'll give you an example right now. Let's say you're in a grocery store, which used to be a grocery store warrior back in the day. Like as every Dominican, it's like when you come here, you gotta start a grocery store. So you're running transactions on the credit card machine, on the POS machine. At the end of the year, that company has to send, they have to 1099 your business, which means that they're filing this tax form for anybody that they received over $600 for, and then they send it to the government, letting them know, hey, we're gonna take this write-off, because this is not our actual income. This is from this, we pay this contractor, or whatever. So the government knows that you made $30,000, but then you're saying that you're making less, and then the numbers don't add up. And mind you, yes, the IRS is understaffed. And then there's like a less than 1% chance of you get being audited. But once you get audited, and you do some shady stuff, now you're under the radar every year, probably like for the rest of your life. So like you need to, whatever you make, you need to report it. And then you worry about paying taxes, just educate yourself on what things you could do, because there's a lot that, for you not to pay taxes. So I would say that's probably like one of the main, like the main one. Everything else just, the stuff has to be ordinary necessary, like for your business, right? Like, so that's the main thing. Or let's say this year you said you made $1 million in 2021, and now this year, you know what? Like then you get a big tax bill. Now this year, we're making $600,000. That can trigger an audit, because like what happened with this $400,000 loss? Like the drop in revenue was crazy. I mean, right now probably doesn't apply much because of COVID, but back in the day, like, and essentially it's gonna go back to that. Like I don't know if they have a system or something that sends out like a warning, like, hey, like this business just lost 40-50% of the revenue. What's going on here? Maybe let's take a quick look.
Right.
Right.
Yeah, and it's good to understand that all of this, they're gonna use technology to, it's not someone that's sitting there like looking at everybody's, but they're gonna use technology at some point where it's gonna be flagging certain situations too, right? I'm sure they're doing it now. So yeah, underreporting for sure. That makes total sense. Yeah.
Yep.
Awesome. Now another question that I would like to add, and I'm pretty sure we could probably wrap it up here, but what are the type of penalties that business owners or entrepreneurs get when they don't file their taxes?
So yes, there's penalties that you pay. The IRS gives you a deadline. Usually it's around April 15th. For most businesses, by the way, like you have to check in with your accountant, you do a little bit of research, because depending on the type of business that you have, you might have to file your taxes a little bit earlier than April 15th, especially if you have like a partnership or something like that. So you'll either Google it. When's my tax filing deadline for the type of business that I have? But anyway, so on average, I think it's like 0.05%, and it's capped. Don't quote me on these numbers, like up to 25%, or something like that. Like that, you're gonna pay in penalties. But this is what you could do. If you had a tax issue that now you're getting penalized, and then let's say you didn't file your extension on time, because you could extend, I think, this year up to September, so you can pay your taxes, and you're not ready to file your taxes by April 15th, you can extend it. But just because you're extending doesn't mean that you're gonna be paying interest, but you're not paying a penalty on that on the money that you're gonna owe the IRS. But for the very first time that this happens to you and you have any penalties, there's something called a first-year tax abatement that lets you kind of waive the penalties, not the interest, just whatever penalties you're facing for the first time. It's kind of like the government giving you a pow. You know what? Don't do it again. Just a warning.
Like a slap on the wrist, like don't do it again.
Yeah.
Now you're educated, but whatever those penalties are, like you can waive them the first year, but it's a one-time thing. After that, then you can negotiate with them or put yourself on a payment plan, all that stuff. But the interest keeps accruing always.
Always, yeah. They get their money.
Oh yeah, they get their money.
No, the reason why I ask is because I know, like, for example, businesses, when they're starting off, they make the mistakes that, well, I didn't make any money. What's the point of filing taxes? Like, I know some people think like that, because when you're not educated, and you don't have anybody telling you otherwise, it's really hard for you to, get out of that mindset. But that's the reason why I asked, for those people that are watching this and you feel like, you know what, I didn't make any money. That doesn't mean that you don't go and now file. Like, you still have to report a loss on your business, right? So thank you, Ariel, for mentioning that. Do you have any other things you want to add to it?
No, yeah, just that's on that same point. Like, at the beginning, obviously, if you just invested in the business, if money went out and not much came in, you still want to put that on paper, right? Because the thing is, you want to establish that record keeping with the government, with, as a legitimate business, so that 3, 4, 5 years down the line, when you want to get like business funding, or you want to get a partnership, or you want to sell your business, you can actually provide like documentation that says, look, I started in 2016, and this is how much I grew my business, year over year. And it's like setting a track record for what you have. So, even for you guys that are listening that maybe just have losses, that have not gained any revenues, you still want to put that on paper and make sure that it's, you can show how much growth you have. Yeah,
exactly. And you said something that's super important, like business tenure. Now you have everything on record that you have been in business for 3 years. So even if you didn't make a single dollar, you can still file a tax return, say like, hey, like, you just didn't make any money. But now you're gonna have a solid history and track record, because guess what? When you're going for that $1 million business loan, the 750K, anything over 250, they're gonna ask for probably almost all your financials, which could be at least the last 2 to 3 years. And yes, that's fine. You didn't make money the first year, but like all they want to see is consistent progress. So it just helps with the narrative versus like, you know what? You have to be in business for 3 years so we can give you this loan, but you didn't file a tax return in 2019 because you didn't make any money. But just by you filing, even if you didn't make any money, it actually helps with the narrative to get you that loan over 250K. Because after 250K, that's when the banks, they really start, taking you through like a very thorough underwriting process.
Okay. Wow. Great conversation. I'm loving it. I took so many notes.
Yeah, same here.
Well, Ariel, yes, we are very grateful for you to, that you came on to speak to us. We definitely want to tell everyone where they can reach you, what you got going on that can help our small businesses, prosper and get their things in order. So if you want to give us a quick, point them in the direction so that they know how to get in touch with you.
Yeah, definitely. I mean, I have my own program that helps entrepreneurs or aspiring entrepreneurs to go from like having a business idea all the way to executing on that idea and making it an actual business. Just I'm taking like the last 10 to 12 years of being a serial entrepreneur, advising other businesses, and I put on a comprehensive guide to help people get started the right way. So, so you can avoid costly mistakes at the beginning, and in a whole bunch of strategies just to help you, grow your business the right way or start your business. So, and anybody that's interested, I would just tell them to find me on Instagram, @money.morel. And then you send me a DM, like, say that you were on this podcast and you heard me talk, and then you said, we could talk about it a little bit more, because it's not something that I have available completely to the public, because I do have other businesses to run. But
got it. No, we appreciate that. So you heard it, guys. Just DM Ariel, money.morel. We'll put it in the description, and just say you heard it on Dinero Twins. Yep. And then he'll take care of you. Yep. Twin. Awesome.
So you heard it here first. I mean, I feel like this was a well-needed conversation. I feel like this conversation is always great to have. It's a great reinforcement for those people that probably have heard it before. But as you know, we cannot avoid taxes, right? We can minimize how many taxes we pay, but we can't avoid it. And if there's people out there trying to tell you otherwise, maybe you should run the other way, right, Ariel?
Get away from the people in the corner store giving you advice that they have business on it for like a year.
So there you have it. Listen to somebody that has over 10 years of experience in this field and is out here actually mentoring and coaching people how they can run a successful business outside of just taxes. So Ariel, definitely greatly appreciated. I hope that everybody that listened to this, you got away with so much value. Make sure you subscribe and stay tuned for our next episodes.
Thank you, Ariel.
Thank you for having me.
Thanks, Twin.
Thanks, Twin.
Bye, guys.
Value in the content shared. Make sure to tune in again every Wednesday, and to also share our podcast link with anyone who can benefit from the information. Till next time, adios.